This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Or sales tax. And if you're wondering what these pretty pictures are on the screen, be patient for a moment, I'll explain shortly. However, this chapter, as it says, is about sales tax. In the UK it's called VAT. But it's not, this isn't a tax exam. Paper F3 isn't a tax exam, so you're not expected to know the detailed rules as to how sales tax and VAT works. It's mainly just the effect on the accounting. In most questions, in the exam, we assume that there's no tax and it's irrelevant, but there are one or two types of questions you can ask which test you on the basic accounting for sales tax. And so that's what we're going to go through in this chapter. But as I say, it's not a tax exam, and so I'm certainly not going to get into any detailed provisions. The reason I've drawn this picture is to make sense of the entries. The entries are very straightforward, but to make sense of them, it is important you know basically how the system of sales tax, how it actually works. A lot of people sort of half understand, but it then makes nonsense of the debits credits later. So what I've tried to show in this picture, in a very simple way, and don't laugh, I'm not particularly artistic, is the stages perhaps that are gone through to arrive at a sweater or jumper, a woolly sweater. And so what I'm saying is, suppose first of all it starts off with a sheep. Here's the sheep, which grows the wool. The wool then goes to a knitter, who knits it and actually makes the sweater, the pullover. That then goes to the shop, who displays it and sells it. And then, of course, eventually it ends up with you, the shopper, the individual, who buys it and wears it. Now, I know in all likelihood it's made by machine and all sorts of things, but just to illustrate the way it works, there's a very simple idea how it goes from growing on a sheep to becoming a sweater that you'd wear. Now, first of all, just suppose there was no sales tax at all. And let me make up some figures. Suppose, first of all, the sheep obviously doesn't pay any tax. Let's say the farmer who grows the sheep. Let's suppose the farmer has zero costs. Again, unrealistic, but the sheep just wanders around in the fields. And the farmer grows the sheep, cuts the wool, and perhaps sells it for, let's say, $10. So if there's no tax involved, the farmer's got sales of $10, costs, we're saying, are zero, and so the farmer gets net cash, gets a profit of $10. He then goes to the knitter. The knitter, of course, pays $10, knits it, perhaps sells it to the shop for $30. So the knitter's got sales of $30. The costs, well, of course, it's that the 10 paid to the farmer. And so the knitter makes a profit of $20. Goes to the shop. The shop, of course, pays $30 to the knitter. Maybe the shop sells it for $100. So they've got sales of $100, costs of $30. They make a profit of $70. And finally, you go to the shop and buy it. Well, of course, you pay $100. And there we are. Now, again, very simplistic. I appreciate, firstly, the knit of the shop and so on to be making lots and lots of sales, and they'll do it all in total. They won't be looking at each item separately as I'm doing here. And secondly, of course, everybody's got lots of extra costs. The shop, for instance, all right, obviously pays the knitter, but they'll be paying rent, electricity, wages, all sorts of things. They'd all come into it, but again, we're keeping it as simple as short as we can here. So I'm saying that's what the situation would be if we didn't have sales tax. But of course, let's assume we do. And sales tax, certainly within Europe, there are various different rates. Some countries are 15%, some countries are 21%, and so on. To keep the arithmetic easy, let's suppose that we've got sales tax of 20%. And the law says, therefore, that every time anybody sells anything, they've got to add on tax at 20%. And as we'll go through, pay it to the state. So, let's suppose the blue figures are what all the people want. The farmer wants to sell it for 10 and so on. But we've now got sales tax of 20%. So, first of all, the farmer. They would have sold for 10. Add on 20%, which is $2. They'll actually sell it for 12. The costs are 0, and so they end up with net cash of 12. However, that extra $2 is tax that they've charged, that the shops had to pay, and the rule is that any tax that you've charged has to be paid over to the state. And so they'll have to pay the tax to the state of $2. The other $10 they can keep, and so they still end up with a profit of 10. It's all right, they'll have had a bit of hassle recording the tax and having to pay it over and so on, but in fact the farmers ended up in exactly the same position as before. They charged 12, paid 2 of it over to the state, they kept 10, they end up with a profit of 10. No problem. But what about the shop? The shop, they want to sell this pullover, this sweater for 30, but they've got to add on tax. So they'll actually charge 30 plus 20%, which is another 6. They'll charge 36, which, remember, is the 30 they wanted plus 20%, $6 tax. Their costs, they paid the farmer, but because of tax, he ended up charging them 12, and so they've ended up with net cash of 24. However, the rule is this, that at the end of each period, where some countries it's every month, some countries every 3 months, but the rule is that they've got to pay the state any tax they've collected, like the farmer did, so the shops collected 6, but they deduct any tax they've suffered on things they've bought. So the shops collected $6, 20% of 30. However, the shop suffered $2. The bill they received for the wool, I beg your pardon, this is the knitter, not the shop, but the bill they received for the wool, instead of being 10, there was an extra $2 tax, so the knitters suffered $2 tax. The net, what they've suffered as against what they've charged, the net $4 is paid to the state. And how much is left? Well, they had a net 24, 4 goes to the state, they can keep the other 20, and so again, they've ended up in exactly the same position as they were before. Again, it's hassle recording how much tax has been suffered, how much tax charged. But in pure cash flow terms, they've ended up in exactly the same position. And so, the knitter has ended up suffering nothing. But now what about the shop? The shop, remember, was going to sell for 100. They have to add on 20%. And so they'll actually charge 120. Their costs, of course the cost would have been 30, but remember the knitter charged 20%. And so they ended up paying 36. And so they'll end up with a net cash surplus of, I think, 84. However, any tax has to be paid to the state, but the amount they pay always is whatever they've collected, which here is 20, less whatever tax they've suffered, which here is 6. And so they'll have to pay to the state a net 14. They had 84 cash, 14 goes to the state, the remaining 70 they keep. And again, they've ended up with exactly the same profit as before. It makes no difference to them, apart from the hassle of recording it. And so far, nobody has actually suffered anything. The farmer paid over $2 tax, but still ended up with $10. The knitter ended up having to pay $4 tax, but still ended up with $20 profit. The shop ended up paying $14 tax, but still ended up with $70 profit. Nobody suffered until, of course, we get to the individual. Because when you go to the shop and buy the sweater, without tax you'd have paid 100. With tax, how much are you paying? The individual ends up paying 120. And we finished. And of course the person who suffered the tax is the individual. They've suffered $20. But how did the state get that 20? They got $2 from the farmer, then they got another $4 from the knitter, then they got another $14 from the shop, and so in total the state has received 20. So it's a neat system. It's the individual, it's the ultimate purchaser who ends up suffering the tax. But instead of the state having to wait all that time while the sheep grow, wool gets knitted and the shop sells it, instead of waiting the whole period, the state's getting a little bit of tax each time there's any value added. So that's the way it's working. And of course, at each stage, the knitter, for example, if there is sales tax involved, the knitter, in their recording, will have had to have kept a record of how much tax they've charged, how much tax they've suffered, so that from their accounting records, they can decide how much tax needs paying over to the state. And I've already said, in most questions in the exam, in fact, we ignore tax completely. But, as you're about to see, there are two types of questions that will be asked, even though it will only be 2 or 3 questions in the whole exam. Right, have a break, and then we'll carry on and actually look at the types of questions that can be asked.